What Bitcoin and some degree stablecoins do is they pierce through these two things. And they say, well, if you're having a video call with someone and they hold up a QR code, you can send them money. As long as they have access to internet, emails, DMs, video calls, things like that, you can send peer-to-peer money that goes around their banking systems and around their ports of entry. In addition, someone can bring infinite value density through an airport. You can memorize 12 words and bring in $1 billion of Bitcoin through a port of entry. No one can prove you have it or don't have it.
Renowned financial and macro analyst Lyn Alden recently diverted attention from the buzz surrounding the potential approval of a spot Bitcoin exchange-traded fund. In a notable interview on the Money Level show, Alden delved into a more expansive and bullish topic: the global adoption of Bitcoin and other cryptocurrencies. While ETF excitement took center stage, Alden expressed growing concern about the gradual decline of the global fiat monetary system, noting its initial impact on emerging markets and its potential rapid spread to major economies. Amidst discussions on the United States economic landscape, Alden warned of an impending recession with far-reaching consequences across all sectors. However, she emphasized that the more significant challenge lies in inflation and monetary debasement. Recognizing the U.S.'s debt spiral, Alden acknowledged the dilemma of resorting to the familiar solution of printing more money, which, though a temporary fix, could exacerbate existing problems. Alternatives, such as increasing government revenue or enforcing austerity programs, were deemed challenging and potentially impractical within the U.S. context. Alden articulated a compelling perspective on the global ramifications of fiat currency debasement. With fiat currencies losing value at an accelerating pace, Alden predicted a natural shift towards cryptocurrencies among the world's 8 billion-strong population, especially the working class. This, in turn, would likely propel the widespread adoption of cryptocurrencies like Bitcoin, leading to significant price surges and rapid advancements within the crypto industry.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think the problem, we're in like a local maximum in terms of technology. So the technology of money, which is that we have fast transactions, but slow settlement, which means that these centralized powers basically control the ledgers. And so there's 160 plus currencies in the world. And if you're not in some of the best ones, you're basically in a currency bubble where your currency is likely increasing supply at a very quick rate. And your currency is not accepted almost at all outside of your country. And the only way to bring money in or out of the country is really two primary ways. One is physical ports of entry, cash and gold, but obviously that's very limited by design. And number two would be bank transfers, which are, again, very surveilled, government enforced. If you get an incoming wire, they can transfer that into your local currency. They can make it so that you can't get the dollars, or you can't get the euros, or you can't get. They can redenominate whatever you get. I know in Egypt a videographer, and he does work denominated in dollars for foreign clients, but when it hits his bank account, it's Egyptian pounds, right? And that's just how it works for a lot of people in the world. And what Bitcoin and some degree stablecoins do is they pierce through these two things. And so that kind of breaks these boundaries that we've built between ourselves, right? So a lot of these countries are corrupt, authoritarian. They're also pressured by external forces in many cases. So there's neo-colonialist, issues at play. And what this does is it says, okay, instead of being in your own currency monopoly, you can now potentially have access to foreign assets or sound money, right? So for example, someone in Egypt, they're in 20% currency supply growth every year. They're on a treadmill to get their wages and savings to keep up with that. The local stock market's not very robust, so most people buy real estate, which is illiquid. I know physicians that stack cash dollars that they buy in the gray market. It's almost like you're going to buy marijuana, but you're buying dollars. It's like a funny scenario. And of course, you're prone to theft, fires. You can't trust your bank to hold that for you, especially if you're not wealthy. And so stable coins are basically offshore bank accounts for the middle class. That's kind of that's the bridge they solve. They say, okay, well, they're centralized, but the central hub is in Switzerland or the United States or Italy or, Dubai, wherever the case may be that wants to provide that jurisdiction. And then, of course, Bitcoin is about as decentralized as you can get, where there's no central hub and people can access sound money and be able to trade with each other without going through these firewalls and these borders. I mean, Latin America, I believe, has 30 plus currencies. Africa has 40 plus currencies. And all of that represents frictions of trying to to trade with each other. That's a massive barrier compared to, say, the United States, which has just relatively free trade, or Europe that has relatively free trade. These are frictions. And what some of these technologies can do is give people power over their own. They can save in a finite asset, or they can potentially buy foreign assets in certain ways. They can bring their money with them across borders or globally should they ever decide to leave their jurisdiction for another one. They can receive payments in a unit that they prefer rather than always having it translated into their own little currency bubble. And they don't have to just continually get diluted by their government or by major banking cabals. I think that's a very powerful humanitarian technology.
Currently, the issue of currency debasement is particularly severe in emerging economies. However, according to Alden, it's just a matter of time before this challenge becomes a global phenomenon. Numerous emerging countries, including Nigeria, Egypt, Lebanon, Argentina, Sri Lanka, and Zimbabwe, are grappling with staggering levels of inflation and alarming rates of currency debasement. For instance, the Nigerian naira, which traded at less than 200 naira to a dollar 8 years ago, now stands at over 1,200 naira to a dollar. Egypt has undergone 2 currency devaluations in a single year, with citizens facing over a 30% increase in the prices of goods and services. Alden warns that this scenario could become a reality for developed countries in just a few years if governments continue printing money indiscriminately. She envisions a future where currencies currently facing such challenges would be entirely wiped out. Transitioning back to the interview, the macro analyst explores early indicators suggesting that America and other developed nations might face a similar reality in the coming years, underscoring the significance of cryptocurrencies in this new era.
The way I would put it is that all of the fourth turnings were sovereign debt crises to one degree or another. And that's what we're going through now. So with the global financial crisis, you had the major private debt bubble. In order to get out of that, they printed money and they also pushed a lot of debt onto the public ledger. And that's the second part of the crisis is when that's all the way up at that level now. And that's when you risk a more inflationary rather than disinflationary crisis, and you risk more of the currency itself. And so I think that the overall timeline of crisis goes from global financial crisis all the way up into the 2030s is roughly in line with how long these things take to play out. And right now we have kind of record political polarization, very large wealth concentration, growing populist movements on both the right and the left, and then the establishment kind of out of touch and trying to keep the power they have. BRICS kind of coming back against the dollar, trying to align themselves to, we'll see how successful that is. We have Bitcoin and decentralized technologies. This is all kind of coming to a head. And I think by the time we get to the 2030s, we get a lot of these questions answered. So during the 1800s, there was a rapid period of globalization. And we can define, there's a number of ways to measure it. We can define it as global trade as a percentage of global GDP. That's probably a good way to do it. So it was rising throughout the 1800s, early 1900s. It ran into a brick wall in World War I. And so from World War I until the end of World War II, you had declining globalization. Then after that, you had a resumption of globalization, which really kind of kicked into overdrive in the 80s when you had the opening of China and then you had the fall of the Soviet Union. So the past 30 plus years, 3 to 4 decades, have been kind of the peak globalization. You have one kind of hyperpower. You had Eastern labor coming together with Western capital. You had Russian resources connecting with, European industrial base. All these things kind of came together and really kind of benefited each other. Now I think we're entering another one of those kind of intermissions where we recede in terms of global trade as a percentage of GDP, or at least at the very least we flatline. Maybe we don't just revert at all, but we don't keep going up. And so when you're going up, that means you're finding inefficiencies and you're kind of connecting them together. And we're either no longer doing that, or maybe we're pulling back and we're building redundancies, which is more resilient, but also more expensive, more inflationary, less hyper efficient. And so I do think we've kind of pushed that as far as we can. And now we have, multiple poles of power that obviously can conflict with their worldviews and their cultures and things like that. When we talk about optimism, I think that most problems are solvable. And so when people ask me what could go seriously wrong, it's generally 3 areas. One is energy security. Without energy, things get bad very quickly. Number 2 would be breakdown of societies. So when just the culture itself crumbles and the government collapses, and then this other government comes in and it's even worse, and then that kind of a breakdown of social norms, of things like that. And the third would be obviously like a major war, like an all-out total war between nuclear-armed powers. To the extent that you can avoid or mitigate those three scenarios, things like currency crises, sovereign debt crises, these things are navigatable in ways that are unpleasant, but not necessarily doom scenario. Some of the things I describe as a crisis in the U.S. or the developed world are like the average Tuesday in many parts of the world. So I think we're going through turbulent times, and I am concerned about a number of things. And so my eye on the ball is basically don't mess up energy security, don't have major war, and maintain some degree of civic virtue. If you do those three things, there's a lot of crises that can be unpleasant but solvable.
In recent tweets, Alden has delved into the concept of the fourth turning, a theory that explores the dismantling of an era marked by the destruction and reconstruction of institutional life. This process occurs in response to a perceived threat to a nation's survival. Alden posits that there's a natural entropy to existing orders, wherein institutions and systems become outdated, unjust, and corrupted during a certain era, rendering them inadequate for their original purposes. This rejection is evident in the United States, where entities like Congress and the FDA receive low approval. Alden asserts that a period of intense crisis and the complete overhaul of the global monetary system is imminent. According to Alden, we are on the brink of a recapitalization of the base layer of money, potentially involving the introduction of central bank digital currencies. Money, she predicts, will undergo a profound transformation. While the crisis may not be fully realized yet, Alden warns that it could escalate at any moment. The events of the next 5 to 10 years, she emphasizes, will play a pivotal role in shaping the future. However, Alden underscores the importance of avoiding the replacement of a corrupt, centralized, and faulty system with an even more corrupt and horrific centralized system. She urges careful consideration of these dynamics in the evolving landscape. Share your thoughts on Lyn Alden's insights in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.